Boys, let's go over my AMC position because I have potentially up to $150,000 position in AMC. And in this video, we are going to go over a lot of important things. One, we're going to talk about implied volatility. We're going to go over why you should not be trading regular directional options, no matter what you see of people retiring. Personally, in my opinion, of doing this 9 years now, the risk does not outweigh the reward. We're going to talk about that in a moment. The other thing that we're going to go over is why I sold a massive amount of cash secured puts on AMC today. We're going to go over why, even though I just told you I wouldn't be trading options, I specifically would be trading this type of option because there's a very high win rate. And as long as AMC closes over $4 by this Friday, which I think there's a massive chance of that happening, we are going to print. So let's go over all of that on top of our technical setup. If you go over to my Twitter, I just opened 100 seats for our free options course, which I highly recommend you guys go and take that course. At least sign up just so you get your seat and then you don't have to take it right now, but it's a completely free, beginner-friendly course teaching you all about options. And one of the major things that we talk about is implied volatility. Now, the position that I've opened is not here on Robinhood. I personally hate Robinhood with a burning passion. I like explaining options and specifically cash secured puts using Robinhood's interface. If we take some contracts that expire this week, you can see that implied volatility is 885%. I want you to understand that normally implied volatility on a stock should be about 50. That's even high sometimes, depending on the security that you're trading. With AMC, normally we would have a high implied volatility of about 90%, which that is still very high. 900% is absolutely insane. Now, the thing that you have to understand is that there is a direct correlation between implied volatility. So as implied volatility goes up, so does the premium of that option. And the premium means the amount of money that you have to pay. So literally, I hate people who say literally, but this is one of those times. Literally, the price of these contracts are almost 8 times 800%, so 8 times what they should be. So you are paying an 800% premium just to play ball. And then on top of that, when implied volatility goes up, so does theta decay. Theta decay, for those of you who do not know about options trading, is basically a poison drip. It is every single day you are losing a piece of that option. Now, the cool thing is that all of the bad parts, right? The 850% implied volatility, losing your money instantly with theta decay, all of the bad parts actually goes to the person who is selling you this option, which means that the person who is selling options in this type of market are making bank. And in this case, that's what I'm doing. So I am selling a $4 cash secured put for this Friday, which means that normally a put is bearish. So I am selling a position to a bear, which means I'm on the opposite side and I am bullish. You can see that the implied volatility on these contracts are 564%. The theta decay is insane at 0.0977. And so that means that if this contract just sits sideways tomorrow, I'm going to make a ton of money. Now, the cool thing about this position is that in order to profit, all AMC has to do, this is it. It doesn't matter how much buy, as long as it does not close below $4 by this Friday, which means it would have to drop right now from after hours nearly 49%. As long as it doesn't close above $4, I will make $10,000. And normally, if implied volatility wasn't that high, I'd only make probably about $1,800 to $1,900. And what's awesome is that even if this thing drops, even if it closes at 550, I'll still make all of the premium that I sold it for. Now, the worst case scenario in this instance is if AMC cratered, which can definitely happen, but if it cratered to $4 this Friday, I wouldn't have the option. I would be forced, I would be obligated to buy AMC shares at $4, which would be not that bad, to be quite honest. Long term, I wouldn't be happy with that. I do not want to tie up that much capital. I would just close it and eat the loss. But that's the beauty of selling cash secured puts. And now I only do this personally, unless it's like a long-term account. I only usually do this when implied volatility is this high, and I only do it with cash secured puts. I do not do it with covered calls, and I would never sell a naked covered call. So for me, as long as AMC closes above $4 by this Friday, we're going to make a really, really good return. Funny enough as well, though, I actually took a position on AMC today and I chickened out before I sold that cash secured put. So I actually entered with about $65,000 worth of shares because we saw that price was pulling its way back down to meet our market bias, which is this green ribbon-like indicator. And usually what will happen is price will move its way up in an impulse, pull back into the market bias, and then bounce to test equal high or higher high. Now, the thing is, market makers are going to fuck with this. We've seen so many halts. I think that AMC got halted like 35, 36 times today. But what people don't understand is there's no circuit breaker after hours and no circuit breaker post or pre-market, which means they can't turn off the ability to trade it the way that they can normally. Volume is going to be much worse. Spreads are going to be much worse. But today they halted it and they cannot halt it in after hours, which is why you saw the market close. And as soon as the market closed and they couldn't halt, we got a pump of about 22%. So I think AMC is probably going to hit $10 tomorrow. And I'm more so just playing the fact that it is not going to close below $4. So I hope that this helped, guys. If you guys want to learn more about options, definitely check out that video. It will go a lot more in detail about the basics of trading, going over all of the deltas, talking about implied volatility, theta decay, and how you can learn to trade options in the best way possible. You have to understand, with me selling these cash secured puts, right, I have about a 90% chance of profit on this position, which is really, really crazy to have that type of upside. Now, the biggest downside here is capping my gains. So I can only make a max of $10,000. So if AMC were to even go up 5,000% tomorrow, I will not make more than 10 grand, which is another thing that you also have to keep in mind. I hope this video helps, guys. Have a great day. Peace.